It's Tuesday, and that means top trades. I'm joined by Greg Guenthner, and we've got markets moving again. We've got some sectors going up. We've got some sectors that are looking tough. And from Gunner's own words, we have a big data week that we are in the midst of. Gunner, we've got a lot of sectors. There's some trades that are looking really good. And then there's some data. What do you want to cover first? I'll let you drive.
Well, I've been talking a lot about the market chop we've been experiencing in the short term. And I just want to clarify a few things first. Some people think that means I'm leaning towards some sort of crash or some big negative event happening in the market. And that's not really the case right now. I think we're just in a period of transition where we are experiencing some chop after such a strong melt-up rally during the fourth quarter. And so we have to deal with a little bit of indecision in the markets right now. We have a lot of folks who came into this rally late, who really weren't sure, if the rally that began in November of last year was for real. And now we have all these folks kind of piling into some of these trades, and we're starting to hit some speed bumps. Yes, the mega caps are looking good. Yes, semiconductors are on fire. But if you dig down a little bit, you'll see a lot of indecision amongst other sectors in the market. A lot of it is pretty constructive, to be quite honest. We're just not seeing those breakouts pop up and extend, especially in the momentum, the growth names that we like to trade. A lot of those badly in January. And so if you're trying to jump on those quick hit trades, you're encountering a little bit of resistance. You're encountering a little bit of chop. And that's why we have to be a little bit more deliberate in this market environment. And by that, I mean we shouldn't be just chasing every single stock that's certain levels, just be diving after every single momentum trade that catches a bid and is up 5 or 6% on any given day. Because what we're seeing is a lot of these names, they'll break out a little bit and then they'll dive right back down to the ranges, dip a little bit lower, and sort of hang out right there. And then we have opportunity costs we have to deal with. We have the situation where we're in a trade that's really not moving in our favor, but it's not really stopping us out. And so we sort of have to wait and see what's going to happen. And that's kind of what's been happening a lot in the month of January. Now, moving into February, this week, we have a ton of data. Like you said at the beginning of the call, we have Fed meeting minutes that are going to hit us tomorrow afternoon. Might not be anything too important, but we still have to be aware of them nonetheless, because as you know, one of the main reasons that we've run into some of this chop with these growth stocks is that expectations for a rate cut in March have fallen drastically over the last couple of weeks. Everybody was all bulled up on the idea that, hey, rates are going to go down a little bit in March. It's going to give a little bit of a tailwind to these stocks. Now that expectations have shifted, everybody's a little bit scared about what the Fed might say next. And then today, like we saw earlier today, the market looked like it was firming up and it wanted to build on yesterday's gains. We had a nice broadening rally yesterday where it wasn't just the mega caps, it wasn't just the semiconductors. There was a lot of stuff that started melting up toward the end of the day, and it was looking very promising. However, earlier this morning, consumer confidence came out right at 10 a.m. The number was a little bit hot. Consumer confidence is as high as it's been since the start of COVID right now. And that kind of spooked the market because good news is bad news right now. They want there to be as much confirmation as possible on Jerome Powell's plate where he says, okay, we've slowed things down enough where inflation isn't going to be an issue. When you have a hot consumer confidence number come through like today, it makes people step back and say, oh no, is the Fed going to, change its plans? Are they going to be more hawkish now? And so there's that whole tug of war going on in the markets right now. And you can see what's happened. You can see the fade from those highs right there.
All right. Well, one thing I will say, this is like a week over week over week thing. We've been looking at the chip stocks, and
Yeah.
a lot of people, because we have a lot of things that we publish at Paradigm, right? A lot of people we like to call bubbles when there's a bubble and all this stuff, and people would look at Nvidia and they're like, "That's a bubble. It's overvalued. It can't do this." What we've seen over the last few weeks, and again, you're the market expert here, but I'm more or less talking about the narrative and how it looks at from my armchair. Nvidia just went kind of to the moon. What we're seeing over the last 2, 3 weeks, maybe month, the other chip manufacturers, Nvidia is not falling. The other chips are catching up to it. So we're
Yeah.
seeing a good amount of these names that are, what was it, SMCI, like they had earnings or announcement. It's like these things are burning higher, and it might just be if Nvidia is too expensive and doesn't have supply, people are running to the shop next door and they're like, I need some chips from you. How many do you have? Can I buy them all? And they're starting to show their order book, and the market is loving it.
Yeah, I think what it comes down to is expectations change dramatically. And I think expectations are more important than something like valuation. Obviously, valuations are important in the long term, but valuations really do nothing to help time these big moves in the market. Because if you talk to anybody about valuations, like you said, back in October or November, they would say Nvidia is way overvalued. And, anybody that looked at the numbers would agree. They'd say, oh yeah, like look at the trailing earnings and how it's trading. It's way too far stretched, to the upside. It probably is getting to pull back. Expectations have shifted dramatically on that, because what's happening right now, like you said, is people are coming in and they're vacuuming up all these chips and they can't get enough of them. There certainly is some sort of AI revolution happening, and there's the demand for these chips is through the roof. And so we're seeing these huge upside revisions in earnings expectations for these companies. And, as I always say, the market is forward looking. No one is looking in the rear view saying like, NVIDIA is trading too expensive relative to its Q3 earnings last year. They want to know how much money NVIDIA is going to pull in this year. And right now, a lot of these chip makers are just blowing away expectations, and everybody's having to go back to their calculators and reconfigure all this math and figure out what the heck is going on and why their models were so wrong. And so when we're in periods of flux like that, that is when you can see these dramatic price movements. We talked a lot about his big breakout, and it's a little bit too big of a stock for me to trade as far as options are concerned. It was a $500 stock when it finally broke out above that blue line you see right there. But this thing shot higher, and there is quite the chase happening right now. Yeah, there's been a couple bumps in the road, but not much of anything. I think its worst day, it was down, 1% over the past several weeks, ever since the start of January, when it really pulled out of that breakout zone right there. And it really hasn't slowed down since. Even on a day like today, where tech is getting hit a little bit, you can see this is the semiconductor sector over here. NVIDIA is green, but there's a lot of chip stocks that are in the red, some a little, some a little more than a little. But you can see just the strength of NVIDIA and how people want to own these top names in this group. We've talked a lot about Supermicro, SMCI. This is another stock that just blew things out of the water when it broke out. I don't really have to draw this line, but I will. I mean, you can see here, the very clear breakout around that 350 level right there. When it pre-announced some serious revenue gains right there. It was up 35% today. It's leaked higher since then. And then it announced its earnings last night, and it's even better than people were anticipating, and it opened up in the 350s. It has backtracked a little bit since then. And obviously, this is the kind of stock that's getting way too hot to buy. And I think the same thing about NVIDIA. But it is important to note these huge shift in expectations and what they can do to the markets and how people have to play catch up. Now, from a trading perspective, I would say, this is a stock that I was talking about wanting to buy when it would come out of this consolidation pattern, this I'd say almost 6-month consolidation pattern. Since it was a really strong performer at the beginning of 2023, I was waiting and waiting, and then all of a sudden it just made a huge run for it and it got away from me. You can catch these still, these big drifters like this. You just need to kind of wait for them to reset. I wouldn't try to reach them up here when you have a situation where if we put RSI up here, we look at relative strength, you can see how this thing is trading in the nosebleeds. Its RSI is in the mid 80s. It's very, very overbought. Again, that's bullish longer term, but in the short term, it's definitely going to need to cool off. And so I'd be looking at this to drop back into the 400s at some point. And then you could try to see where it's going to make that base again, where you're going to see another consolidation area. Because if we go back here, you can see these big moves, and obviously it's not as dramatic as what we've seen so far this year, but you can see these big moves from May of 2023 all the way into August, where it went from $100 all the way up to $350, $340. That's a big, big move for a stock. And you can see how long it took it to grind through all that supply and to flatten out and form a new base before it could really rocket higher right there. So we want to be looking for something similar to maybe happen here. Where is it going to land? Where is new support going to be? I don't think this is one of those trends where you're going to see it shoot higher and then come right back down to 350 unless something bigger is happening in the overall market. But at the same time, we want to find out, where's that next level going to be where this thing is going to reset and then move higher? And is it going to need as big a reset as we got in the latter half of 2023 before it takes off again? So we can keep these charts in mind, and we can put them down as strong stocks that we want to eventually get involved with once they chill out and once we figure out where those new levels are going to be.
Yeah, and I'll put on my fundamental hat a little bit more because everything Gunner's saying is correct. But the other thing is to say, oh, if you're somehow in that bubble logic, or yeah, I think Robert Rode's like, hey, can we play the pullback on the downside? There, there is real reason, and it might just be reality. Like the price is going to happen, charts are happening, and then the reality is going to catch up with it. The narrative is going to catch up with it. When I was in CES earlier this month, talked with a lot of chip makers, and one of the chip makers is saying, oh, well, what our chip does, it's like pretty much the same, but it uses 1/8 the energy. If you start thinking about it that way, so change your mentality, and everyone knows Bitcoin, crypto mining, and AI are going to be very energy intensive. Everyone's like, it's going to take up so much energy. Buy uranium. Uranium's doing well. Buy this energy, buy this, this. The other way to think about it is the reverse way. If you can buy a chip that uses less energy, it's the same type of upside opportunity. So what if that's starting to bake into this too? That these chips are actually, there's certain chips that are just better and they're saving electricity and they're going to be the ones that are only capable of handling, whether it's crypto mining or AI. Some of this stuff could stick. So I wouldn't bet against this like it's a complete bubble and this is a joke because this could be some sort of like form of energy play, a picks and shovels on an actual place that we're going in technology and information.
Yeah, I mean, I think you're absolutely right. And again, I'm not above betting on something that is quote unquote in a bubble. There's nothing wrong with betting on fads and betting on big trends because they often extend a lot farther than people think they will. And they end up being really great trades if you can catch that tiger by the tail and really hang on tight to them. Now, I will say that, somebody mentioned in the chat, Robert mentioned in the chat that like, hey, is there any downside play to this? Yeah, I think there is too. And I was looking at potentially playing SMH on the downside at some point last week. We had this stall out right here where you can see this solid green candle right here. That means it opened up higher right here. It's still closed in the green, but closed well off its highs. It kind of felt like it was running out of steam at this point, and then it had the big down day on I believe it was earnings. Was it Texas Instruments? It was some earnings that didn't really pan out. Somewhere down on the lower end of the sector and the less hyped chip stocks, but somebody posted bad earnings and it was down. SMH, the whole sector was down 2% plus on the day. It's been building off of that ever since, but how is this bounce going to materialize as far as the sector goes? And are we going to see some of the weaker ones really start to roll over? We're seeing a little bit of them roll over today. We're seeing TXN down another 2%. Intel's down a little bit, but they had pretty good earnings the other day. AMD reports tonight. So I think we're probably going to get some more news that could move the entire sector tonight since AMD has been a hot name, if we just look at that chart real quick. So just due to the environment that we're in, I don't want to go and buy a bunch of puts on SMH at the moment because I feel like it could be a trap. We could be in a situation where this thing isn't out of gas just yet. Yeah, it's overbought. You can't really argue that, but overbought can lead to more overbought. And I don't want to put myself in a position where I try to buy and then I try to buy some puts and play some downside action. Then we get some really good earnings from AMD that just lights this stock on fire and then everything moves up in sympathy again. That would be pretty devastating for any new trade that you try to put on right there. And you can see, I mean, AMD has done a great job of catching up. And like Matt was saying, we're in a situation, I think, where at first it was like NVIDIA makes the best chips for AI. Everybody wants these. And I think it's to the point now where NVIDIA is not going to be able to keep up with demand for this. And everybody's going anywhere they can and vacuuming up these chips wherever they can find them. And there's lots of competition out there. So just from a pure raw demand perspective, and for how hot things are getting in AI and how everybody's pivoting in that direction. And that seems to be the narrative in Q1 moving forward right now. I think it's very difficult to really catch and play some downside. I'd like to try, but I want to see some stronger signals and I want to get some earnings out of the way too. I think once we're over the hump and get out of some of these earnings, a big chunk of the NASDAQ 100 and the S&P 500 are reporting this week. If we can get on the other side of earnings and these potential news trend breakers, then I think we have a much better chance of playing pure price action and being able to play some downside action right there. But yeah, I mean, it's undeniable how hot this sector is right now, especially when you can consider that you have growth stocks and a lot of the tech growth names that have just plummeted, and are down double digits so far in January, just due to the whole reconfiguration of people's minds around what's going to happen in March with the Fed.
Yeah. What else is on your watch list? What's top trade sector or top trade that you want to look at?
Well, I was looking at energy last week because we've been talking about this a lot, um, about how we could possibly be in some sort of tradable bottom. For energy names, this seems like an interesting contrarian play that nobody's watching right now because everybody's so enamored with the Mag 7 and the semiconductors. And then we have, a decent looking move in crude. We've talked a little bit about this, how buyers seem to be stepping in, and this is a WTI chart right here. Buyers seem to be stepping in the high 60s and pushing this thing higher every time it gets down to that point. And then we had it curl up right here and look like it was going to try to break out and run. And then, of course, because of the environment that we're in a little bit of chop right now. We have a really nice day for crude, and the next day down 1.5%. And now it's trying to build off those lows earlier today. It looked like it was going to just totally retreat back into this range, but oil's back up into the high 77s. It's looking a little bit stronger now as we move closer to the afternoon, closer to settlement. So I am interested in possibly trying to play something related to oil, related to energy, because like I was saying, I don't feel like this is the kind of breakout, or this is the kind of market where we can necessarily trust these big breakouts to new highs. There's a lot of interesting looking charts that have been setting up, and they, like I said, they've been kind of peeking their heads out, and it's almost Groundhog's Day. So I think we can talk about this stuff. It's like, are they going to see their shadow or not? They're peeking their head out to blue skies, and then they're saying, maybe I don't like it up here, and they're going back down under. And we're seeing that a lot. Even some of the stronger software stocks, we're seeing these kind of breakouts emerge, and then they start to fade, and then they're back into their choppy range. I mean, you don't have to look much farther than crypto to see what's going on there, where we have a situation with Bitcoin where we've had fake outs in both directions. And I think this was one of the lines we were drawing at some point last week during the call, where we have this very obvious consolidation range that Bitcoin was in back in December, and then it breaks out in anticipation of the ETF approval news, and then that was a sell the news event. It cuts right down through that consolidation zone, and then it looks like it's going to lose 40, and it's all over for Bitcoin. And then, hey, look what happens. It bounces, and now we're right back in the middle of this choppy consolidation point. So we have a false breakout, a false breakdown, and we're back in the middle. That is a frustrating market right there, and I think that is kind of indicative of the market situation for a lot of these other stocks. Charts don't necessarily look as maddening as this one, but we do have situations where it looks like stocks are going to break out and then they retreat. And so I'd much rather try to play something energy related that's coming off of a low where we could see maybe it's still bouncing these ranges, but if it's going back up to the top of its range, we still have a bullish play on it. And we don't really have to worry about necessarily chasing a breakout in this type of environment. I think we've traded RigO over the past few months. This might be an interesting play because this is volatile. It's a little volatile one right here, and it's coming off of its lows right here. But potentially we could see, and again, look at what we're seeing in this. I was talking with somebody about this just late last week, another trader friend of mine, where it dips back and it looks like it's going to break down right here, and then it pops back up right here. And this one can move really fast. Obviously, this thing can shoot up, 10-15% in a day. It's a great trading stock. It's very liquid, low priced. It's an interesting play. And there's other stuff too that actually looks pretty decent in an energy sector too that I might want to trade short term. And so if we do continue to have these problems, in the ARC stocks and the momentum stocks and the tech growth stuff, then maybe we can look in different corners of the market and see other stuff that could be popping up. And it's not just oil either. We've been talking a lot about uranium. Uranium finally seems to want to come out of this zone. Yes, it did make a frustrating, gap down and then reversed and then gaps up and then closes that gap. It's closed that gap now. This is the uranium ETF that I like to look at, URA. You can see how it's closed this gap fully. We can move this line down here. You can see the bottom of that gap right there where it closed it, and now it's bouncing off of right there. Is this going to now finally extend higher and be a less frustrating entry point? I think maybe. This is like one of the top names on my list right now. This is Top Trades Live, so I'm talking about a top trade. This is the kind of stock that I might want to get involved in if everything sort of lines up for us this week. Again, we do have some trend breaker stuff. We got earnings, we got the Fed, we got a ton of economic data this week. However, this has been an incredibly strong trend, a little bit maddening, a little bit tough to jump in here and buy some of these bigger moves higher. But since we have the gap fill and then moving back above These pivot highs back here in mid-December. I like the looks of it. I think CCJ is going to look very similar to URA. It's a big part of it. And yeah, see the same thing. It even went further than filling the gap. It kind of faked lower. And again, tough trading stocks sometimes. Yes, the trend is strong, but they make you pay for hanging on right there, where you have big gap up days there where it's up 7%. And then you have big retreats like this 3% drop back down here into its range. And it's been building 3 days back to the top of that right now. Can it clear 48.50 and start moving in the direction of $50 again? I think if it really starts building right here, this is a solid buy area, and then we can sort of set a stop down here somewhere in the mid 47-ish range, and that's when we'll know we're wrong, and we have to pull out if this thing doesn't extend. But again, zooming out, you got a beautiful trend here. It feels like the uranium story, which has been, oh man, it feels like every year for the past 5 years, uranium is going to be in play. Uranium is going to be in play. And now it finally feels like it's really starting to become a big
Dude, it
theme.
was like 9 years. It's been since like 2015. Just...
Yeah, maybe so. I feel like for the past few years, especially, it's been a situation where it's, fool me once, shame on you. Is that how it goes? I feel like uranium's fooled us a bunch of times, and it's looked like it's going to break out, and then it's been like, nah, just kidding. I'm going to go down 50% again this year. Now, I mean, zooming back out to the beginning of 2023, you can see that things have definitely changed with this, and I think maybe finally, the narrative is changing. Maybe the narrative around nuclear is going to change. Maybe not in Germany, Matt, your favorite country, but in some other places in the world, maybe they're gonna knock some common sense back into their skulls and realize that this is the way to go. So we'll see.
I was actually thinking on the opposite side of that. Like, again, you heard me last week about the German economy, but what if they make some announcement? They're like, look, we said we were going to stop our nuclear program. We're back. That would blow this stuff up.
Yeah, you would think it would. I mean, I haven't seen any evidence that there's any common sense revolving around any of the energy policy in Europe, but yeah, that would be great. And even here in the U.S., I mean, nuclear power has come a long way, and the fact that it's totally disregarded with the climate change narrative being as powerful as it is these days is completely insane. And so maybe people will finally figure this stuff out. I'm not holding my breath, but at the same time, we got a nice trend here. Let's take advantage of it if we can, even if it is kind of difficult to trade.
Yeah. Some of the stuff I'm seeing in the chat, someone was talking about gold miners. It looked like Robert was talking about biotech with XBI. So I don't know if you got anything to say on gold miners, what they're looking like, or XBI and biotechs.
Yeah, gold's been a tough one. It looked like it was going to extend a little bit today, and it's retreating again. Are we seeing more? I haven't looked at the dollar in a hot second. Is the dollar firming up again? Yeah, it is. So I mean, this is your culprit right here. We have the dollar firming up right here in the 103.50s. I think it feels like it's setting up for a little bit of a push higher, and that could be an issue for risk assets, especially precious metals. I think someone in the chat mentioned earlier that we haven't seen the gold miners do much of anything, and yeah, they've been a serious disappointment. You would think that if we were in a more favorable environment for precious metals, then the miners should be leading. Silver should be really pushing higher, and a lot of the stuff has completely reversed. You see how silver's a hot mess. Yeah, it's off its lows right here, and it did not go back and retest those October lows, but at the same time, I mean, like, this is a pretty directionless chart right here. We have lots of pops and drops. It's down near in the lower end of this choppy range that it's been in. It's below, well, it's just above 23 today after a decent move higher yesterday. But at the same time, it feels like if we're still going to see this dollar strength, I think it's going to weigh pretty heavy on precious metals. And then looking at GDX, the same issue. No traction here. And I was talking about this back in December, thinking that, like, okay, here finally, the miners, which act almost as a call option on gold when things are going well. It's a great way to grab some bigger gains than what you're going to see from gold, which is a little bit slower moving. But again, zooming out, it just looks messier and messier the farther you zoom out. No, it's not at the bottom, but it's not even really in the middle of its range right here. This is a choppy mess, and I'm hesitant to try to trade it either way at at this point. This is a back burner, hurry up and wait kind of situation where we need to see how things are going to flesh out and how far the dollar is going to go. How far is this dollar reversal going to take us? And so I feel like these are all no touches for me, either on the long or the short side. And then I have somebody asking about copper. My copper proxy is FCX, and again, looks better than it has, following that big drop to start the year. But again, we're still in no man's land here. Earnings look good. Like it produced some really nice looking earnings, and I remember people were chatting about it late last week. Maybe not in the chat, but like there was chatter amongst analysts and in social media about like, ooh, FCX looking good earnings. Well, it hasn't extended off of this. It's holding the gap from that 4% upside day after it announced earnings, but like it's not really doing anything, and we're still stuck down here below this gap. This is a messy chart, not one that I feel like I can hop on. And again, the farther you go back, the more we're just in a bunch of chop right there. And so my instinct here is like, let's look at the stuff that is a little bit more constructive. We have some more levels that we can play against. We got a note here. FCX may look iffy, but copper futures look good. Okay, well, maybe if that's the case, this is kind of my proxy. There's really not a lot of ways to pure play it on the market. So, I mean, unless this firms up and really takes out $43, then I don't really know what to say about it right now, other than the fact that it's kind of dead money walking. I'm looking for opportunities where things are going to move now. Not like, oh, maybe in Q3 this will pick up steam. Maybe it will, but that's dead money walking for now. And I want something that's more directional. Yes, exactly, John. Sideways. Like I don't want sideways right now. We're in kind of a sideways. You're kind of stuck sideways. I want to see stuff that's moving up. I think you're better off looking at like coal. This is Arch Resources. It's retreating from those highs from earlier this month, but at the same time, you can see how this chart is shaping up a lot better. And if we zoom back out, we got a bit of a breakout, and it's retesting that area right now. This could be an interesting trade off the bounce right here. And this isn't going to be much of a chart, but if you guys remember, there was that coal ETF that was delisted years ago, KOL. Well, we're back. There's a new one, COAL.
They got a good ticker.
Yeah, they got a good ticker. So you can think about this a couple different ways. Now, obviously, it's only been trading for a few days here. But when they delist an ETF, a theme ETF, I usually think, ooh, that's going to bottom and turn around. You know what I mean? It's kind of like a stock that gets kicked out of the Dow. It's like that'll flatten out and it'll turn around and it'll have a really good year once it gets out of the Dow. You have enough churn of shareholders where it'll set back up and it'll start looking a lot better. Coal was looking terrible. They ditched the KOL ETF, and then coal went straight up for a couple of years. Well, now there's a new ETF. Is this bearish for coal? I don't know. So, I'm not looking to trade this yet. It has no price history really, but like if we look at like the biggies, like Arch, and we see what we're seeing here with this chart, it looks pretty constructive to me. And if it can successfully, and again, we don't have to take big chances on it, but if it can successfully like retest these prior highs, you can see where, it bumped up against this 175 level a bunch of times. If it can retest this and then really extend off of it, I think this trend is going to continue higher, and we just have a nice springboard move right there. And it's low risk entry point.
Yeah. And if you need the narrative, just look at downside China. What does a country do if they're struggling economically and they need a bunch of energy? They go to the cheapest form of energy. They are burning the hell out of coal in China. And that's where this coal, I'm guessing on it, but we're still exporting coal. It's just going in a boat, going over to China, and they're burning it up.
Well, yeah.
So you have the green
China,
police.
I think China and India are building out coal plants big time. They need power, So they're going to be building what they can build to get that power. And also there's there's thermal coal and there's coking coal. There's two different sectors kind of there in one. I'm more interested in the trends, obviously, but I think
but uranium and coal should be the same trend, right? That's just power, it's baseline power.
Energy. We need more people, more energy, progress, energy. It makes sense. So we'll see how this pans out. But yes, overall, looking at the daily and then backing up a bit, You know, that's all that it needs to tell me, that this thing is pushing up against its highs right here, you know. And the more people talk about climate change and try to shoehorn climate change in every single conversation, you know, like there was an article about that new cruise ship IUs or whatever, read where it was like, hey, this idea about climate change into it, that always makes me more bullish. You know, when you have some sort of naysayer hopping on to some sort of theme like that and trying to shoehorn whatever the green issue du jour is into it, then you know you're kind of on the right track with something like that. You know, anything like that. When politicians start talking about solar and how important it is, maybe solar's a short at that point. You know, I think you have to kind of think of these things a little bit backwards, because whenever they try to push something, it always kind of goes in the opposite direction. I'm seeing some comments. Is the Wi-Fi connection back, you guys? Can you guys
Yeah,
comment on that?
we
I know we were
can.
blinking back and forth there for a
Yeah,
second.
we can hear you. I heard all the sentences, but they got choppy. It was good for a while, but now we're back to chop land. So we'll try and get this worked out by next week and try
Okay.
and figure something out. Gunnar, why don't we could maybe keep this one a little bit short. This is going against kind of what you just said, but it was a question. I think it was like the guy's Lynch, it was Double L. Double L was asking for longer term plays. I understand this is not going to make sense with top trades. This is going to make sense with your swing trading mentality. But I know you personally, you're looking at stocks, you're looking at long term, short term. What you do normally for your paid publication, the trading desk is short term, but anything that you like long term, like if you had to buy and hold something for a year or two, is there anything? And again, this is all off the cuff, so no, this ain't an official portfolio or anything, but anything you like?
I think
Yeah, you're good.
uranium is something that I would build a long-term position in right now. That makes a lot of sense to me. Like I said, sometimes the short-term charts line up to the longer-term trends. I think we're seeing that in coal as well. I think those are two interesting longer-term plays, and I like them because they kind of go under the radar of some of the bigger stuff that's happening out there. Like we could have a situation where, you know, semiconductors front load all their gains, you know, this year. I still think I'd be overall bullish with everything that's happening right now. But if they're front loading all these gains into Q1, then they're going to chop along for a couple quarters, you know. So if you're looking out ahead 9 to 12 months, you know, I don't think you want to buy the super extended stuff. I could be wrong. They could keep going, but I think they're going to need some hard resets and some time, just time corrections, just to sideways bleed off some of the euphoria, some of the enthusiasm off some of these things. I would look at that. I think there's momentum building maybe in like sports betting again. Something like DKNG, which is breaking out right now. It's been kind of a choppy trader. We took a stab at it last year and got caught up in this downturn right here at the end of December. But I think something like this longer term is kind of building up. There's been a ton of chatter about Uber, and it feels like it's finally coming out of this big base that it's made. I feel like this is one of those stocks now that it's extending off of those highs right there. This
Look at
is
that
one of
little
the
line you drew, dude.
yeah, yeah. See, it's a big look at this big fake out. This little line where it was like, look at that breakout. Nope, just kidding. And then it took off again. Um, I feel like Uber is one of those companies that you kind of put in the basket of maybe it's going to become a big player at some point. You know, if it can really monopolize that space, that delivery slash rideshare space right there, that it has a ton of potential to scale bigger and bigger and bigger and bigger. So stuff like that is interesting to me. You know, again, like maybe this isn't just you know, maybe this isn't the play to buy like right now, but at the same time, like longer term, when you really look at how it's setting up and you look at how, you know, how the market is moving, you know, and if you could want to extrapolate things out like self-driving and that sort of thing, you know, you could be in a situation where Uber is a mega cap player at some point down the road. And again, these are just guesses. I think they're fun exercises, and the trends will bear this out in real time, and you'll be able to play these in real time without having to know these things. But these are the type of things that I've been thinking about and looking at. And we've talked about, like, you know, some of the consensus longer term stocks that could make it big. Like we talked about PLTR, and I know there's a lot of folks at Paradigm who really like PLTR.
Like
Um,
me. I'm in it.
yeah, like you like, yeah, you like it. but we're kind of in this period of of extreme chop right now, since for the past, I would say 7 months now. It's been a great trader if you've been really trying to, you know, uh, grab onto some of these quick moves and just buy and sell. But right now, we were talking about how a stock like this, how's it going to pull out of this, you know, out of this failure up here at $20. And right now it's been pretty sideways. So yes, it's broken out of that downtrend, but it hasn't really done much after this gap higher. And when are earnings? Uh-oh, earnings already happened? Nope, Monday, February 5th.
Yeah,
So
coming
we
up,
have
maybe.
earnings coming up for this guy too. So maybe this isn't something that, like, I'd be grabbing ahead of earnings, but at the same time, it's an interesting longer term play. And so when you see these things set up and when you see them get less sloppy and start to get tight, I just talk about charts getting tight. Once these big candles turn into little tight candles and it really starts consolidating and it looks like it's going to get to a point where it's going to have to break one way or the other, then I think that's a good time to build a position in something like this. So we'll see how it does if it ever comes back up here to $20 in the near future. We'll see how that works out. But those are my longer term ideas that I would be thinking of right now. And I think of these things in terms of market cycles too. So we'll see how things play out. But seasonally, if you look at how election years typically play out, you have a situation where you get a lot of chop in Q1. So last year in 2023, we pretty much played out pre-election year seasonality to a T. Doesn't usually happen like that. You'll get some separation in there, and the magnitude is usually much different on some of the moves, but the direction is pretty much how you would expect it to be. In an election year, most of the gains are very backloaded toward the end of the year, toward when the election happens. So end of Q3 into Q4 is when you see the gains, and you're going to see a lot of sideways action chop up until then. So if that's the case, and I think it very well could be. Yes, we have seen a lot of new highs in January, coming off the euphoria of the melt up from November, December. But it's been fairly concentrated. We have these new highs in stocks like Meta, Microsoft, Nvidia, AMD, those type of names. Are we going to see that broaden out, and are we going to see some of these other breakouts stick, or are we just going to be in the chop for a while? I mean, look at yesterday. Yesterday, the market looked very receptive to people buying up everything they could see. The rally was broadening out. Things were looking pretty good. And then today we have we're kind of losing steam. The Nasdaq's down a little bit. We're seeing sort of split performance from the mega caps today, with Amazon, Google, Apple all down, while Nvidia and Tesla are up. Tesla's up probably in sympathy with GM, since they actually reported some surprise good earnings. Who would have thought that General Motors has its act together? But if you look right here, we got another nice gap higher right there after this false breakdown. And I must have drawn some lines on this, talking about it in some previous call. But you can see now we can draw another one here, and we can start thinking about, like, okay, how's this thing going to build toward the top of that range? And is it going to be able to break above 40 to $44 and really come out of that ugly bear market that it's been in for some time now? I don't know.
They probably stop throwing all that money down the EV pit.
Maybe,
Like,
yeah, maybe
none of
that
that
would be
money's coming
good.
back. We should stop throwing it down there. And then everyone's like, oh, good. Yeah.
Yeah,
Good
maybe they're
earnings.
back to building big V8s that people want instead of electric cars. I don't know. But
Yeah.
Tesla, I think Tesla still looks pretty broken down here. So we'll see what they do. I mean, it has stabilized since reporting earnings, but it's been a bit of a mess. And we talked about, like, how it looked like it was coming out of this to the upside at the end of December, and then it got sucked down the drain and then gapped lower on earnings. And now we're still kind of in no man's land down here, still below 200. So,
Yeah.
I think that's a no touch as well. I wouldn't go all out and like start shorting Tesla, but wait to see how it tries to fill this gap and where it goes from here.
Awesome. Well, if you're at home, you've got your own takeaways. I do think one of the things you just said resonated. Again, it's out of your normal strategy, which you're good at. You're good at looking at charts, getting short-term swing plays. That's the bread and butter. But thinking of Uber, I mean, that's going to stick with me, because then you start thinking Uber's the U. Like, they're going to have like a FANG, and then they're going to add the U in somehow, or the mag U. I don't know. whatever. I like that idea though, because that is a company that could bolt on and become relevant long term. So that's interesting.
Yeah, and
Again,
that's and that's not and that's just a lot of chatter that I've been hearing. That's not something I'm just pulling out of thin air. There's a lot of people a lot smarter than me who seem to think that like, and there seems to be this shift toward like Uber might be the real deal, because there was a lot of, and I feel like a lot of great stocks kind of start out this way. That it's like, okay, you have this like disruptor novelty that's out there, but can it really scale and really become like this force? And now it seems to be like, if that narrative is really truly changing, then we could see a very extended trend higher in Uber as it climbs that cap scale. And then, if people really start, extrapolating into the future, then they can start talking about all that self-driving stuff,
yeah.
and how it can dominate. And if self-driving really becomes evident that like that's going to be a big thing in dense urban areas, then Uber's going to dominate delivery and, and passenger spaces. So it could be a big deal.
Awesome. All right. Well, we'll wrap it here just because of a little bit of spotty Wi-Fi. You've got some stuff that you can cover tomorrow morning in the trading desk for any of your subscribers on portfolio plays and stuff like that. Gunnar, I'll give you the last word, but we appreciate it.
Well, we got more economic data coming this week. I think we have jobs numbers on Friday. And before that, we have FANG earnings. We have, what is it? Google, Microsoft, Apple, all of these companies are reporting earnings this week at some point, either this afternoon or Thursday after the bell. Tuesday and Thursday are the big days. And that's the stuff that can really move markets, at least temporarily, in one way or another. If somebody surprises one way or the other, then we could see some fluctuations. It could chop us around a little bit. We saw what happened just with the consumer confidence number today. You would think something like that would pretty much go unnoticed, but like right now, it definitely feels like the bulls are on edge, and we're in a situation where, like we could be in a situation where everyone says, I'm not too sure about this market right now. Everything that we thought was going to happen in November and December in 2024 hasn't come true yet. The Fed is backing off, this idea that it's going to cut rates sooner rather than later. And people might be starting to push that idea to June and then maybe to Q3. And I think things are going to get very messy there because the market had its heart set on dovish Fed. That's what turned the market in November, was dovish Fed, rate cuts in March. And now it's less than a coin flip that we're going to get rate cuts in March. And people are kind of like, okay, now what's going to happen? What's going to happen to my growth stocks? What's going to happen to this? And so that uncertainty is creeping back into the market. We're going to have to see how all that plays out. Again, that doesn't make me feel like we're in some sort of massive drawdown bear market, but I do think things are going to be a little bit more difficult. We're going to have to be more deliberate, especially on the long side. And we're going to be able to trade things both ways.
Yep. All right. Lots to keep an eye on week over week. So we'll be back next Tuesday with top trades. We appreciate you guys. We'll see you soon. Thanks, Greg.